Welcome to this ACCA video. If you are studying SBR at Strategic Professional, this video is aimed at you. My name is Tom Clendon and I'm an experienced lecturer in preparing students for their ACCA examinations. This video will debrief question 4 from the first ever SBR exam in September 2018. There are other videos debriefing the remaining questions from this exam. In the debriefs, I will be analysing the requirement of the question, showing you how to apply your knowledge effectively, thinking about our answer plans and presentation. In debriefing this question, I am assuming you have attempted it and have the exam to hand. The requirement of question 4 is for a total of 25 marks, all dealing with the topic of alternative performance measures. Part A we see here is for 10 marks. Now the topic area of alternative performance measures was introduced to SBR. It featured in the specimen paper and was the subject of a really helpful article written by a member of the examining team. Overall, students' results were polarised on this question. Some doing very well, presumably those who had looked at the specimen paper, considered the useful article, but there were others who struggled to pick up marks. Now part A is for 10 marks. Let's have a consideration of the question. Let's have a consideration of the answer plan as to how we might go around picking up some of those easier marks. The requirement of part A is to advise the directors on whether the above alternative performance measures would achieve a fair representation. And we're doing this for 10 marks. Let's have a look what they're actually talking about then. The opening couple of sentences gives me a reminder that alternative performance measures are those other than defined or specified in IFRS. In other words, we're looking at voluntary disclosures, additional disclosures that are not required. Stepping back, I can see that there are 4 paragraphs and that the 4th paragraph is a short little paragraph relating to tax, and I'm going to assume that they may be worth 1 mark for that. This would leave me with 3 marks to be gained from each of the alternative performance measures. So I'm going to read each paragraph and try and identify 3 things that I can say. Short, sharp, simple sentences that relate to the question, that relate to the knowledge. Are these alternative performance measures fair? A part 1 tells us that there's an operating profit which is used as a headline measure, but this operating profit is before extraordinary items. What is meant by extraordinary items? That is not something which is defined in IFRS. Arguably, that is a confusing term. We're told that extraordinary items relate to things which are deemed to be non-recurring. But Tabasco has used restructuring costs and impairment losses, and both items were in the previous years and were likely to occur in future years. Therefore, they do recur. They have recurred in the past, and they're expected to recur in the future. It is therefore misleading to exclude them. The next alternative performance measure that we're told about relates to operating free cash flow. Now, this is calculated in a certain way, less the PPE expenditure, purchase of own shares, and purchase of intangible assets. Now, whilst they've described this as being residual cash flow, they have given no detail as to its calculation. Is that fair? No. You need to explain to a user how it's calculated, especially as they've said it's important to the business. They've shown it in bold next to EPS. Why? They're not related. That's confusing. And if you want a third point, if you are trying to calculate some kind of free cash flow, what about interest? Surely, if you've got debt, there's a mandatory requirement to pay interest. It's confusing, it's not fair. Part 3 relates to the classic alternative performance measure, EBITDA. Now, this is described as a record performance by the directors, but when I read the information, it did not disclose any comparable information. There was no reconciliation to previous years, and in previous years, rent had been deducted. There are my 3 points. Why do we not disclose any comparable? It's not fair. Why is there no reconciliation? That does not give a fair presentation. If we have changed the way that we've calculated EBITDA, then there is a need to explain. Otherwise, it is not a fair presentation. Finally, for Part A, Part 4, it says the directors have not taken any tax effects into account. Surely stakeholders, investors, if they're looking at profit, want to have a look at a post-tax profit. So a fairer presentation would be to look at these adjustments post-tax. If I can step back for a second in respect of Part A, there were 4 separate parts to Part A for 10 marks. In a good answer, that should have been laid out with 4 mini headings. Yeah, extraordinary items heading, free cash flow heading, EBITDA heading, tax heading. And under each heading, there should be short, sharp, simple sentences making your point, trying to earn 1 mark each time. Anyway, let's have a look at Part B of the question, which is also about alternative performance measures. So the requirement of Part B wants us to prepare an adjusted statement necessary to correct errors that have been included in net cash from operating activities. It also wants us to do a reconciliation from the cash generated to this operating free cash flow. And that's for a total of 8 marks. Part 3 wants us to explain these adjustments. And if we do so well and articulately with clarity of our discussion, there's a potential 7 marks available for that. So this is a question which is partly about numbers and is partly about words. The first part is about the adjustment to correct errors. David is a car retailer who leases vehicles to customers under operating leases and often sells cars to a third party when the lease ends. So as an aside, that actually means that David is a lessor who will have rental income and also be selling cars in the ordinary course of business. Now we've got to do a reconciliation and a correction. The inference in the requirement was that net cash generated from operating activities was incorrect. And when I look at it, I'm fairly happy that income tax is paid and pension deficits paid and interest paid are the normal sort of things that I would expect to see. But this share of associates' profits is not a cash income and is actually normally ripped out. Just like you add back depreciation because it's a non-cash expense, you would be removing profits that have been included because they're non-cash income, and the share of the associate's profit is non-cash. So I have a major question mark about that, and I think we'll be removing that. Now we know that there are some other errors, and the directors are providing you with information about these potential errors. And let's have a look at note number 1 first. This is telling us that cars are treated as PPE because when they're leased out under operating leases, the risk and rewards don't pass. We keep them as our asset. That is absolutely correct. And when they become available for sale, we start trading in them. They're transferred to inventory. That is correct. Now, in our statement of cash flows, the cash flows from investing activities include the cash inflows relating to the sale of this stock. That's wrong. That's wrong. If you're selling stock, if you're selling inventory, that's not an investing cash flow. That's an operating cash flow. So this 30, needs to be added back to this 278. for that reason. Now, hang on a minute. I need to pull back. I need to think about the bigger picture. I need to think about my answer plan. What I would like us to think about is doing this answer efficiently, so that as we do the reconciliation on the left-hand side of the page, we do the explanation of those adjustments on the right-hand side of the page. In other words, we think about these adjustments once. We do the numbers and the explanations at the same time, and then we move on. And that's all about planning our layout and starting in the right way. Instead of going through this question line by line by line, let me show you what I mean in that big picture, that presentation, that good layout. So I hope you can see what I mean now. That we start with that 278 from the question. We're going to add back the cash flows because they are from the sale of cars, which is an ordinary part of business. And we're going to remove that associate profit. And in this way, we're efficiently picking up those easy marks. And the same can be done for the free cash flow reconciliation, so that we're being efficient in our presentation. We're simultaneously showing the numerical adjustments and the explanation side by side. By the way, I'm not claiming that the answer that I'm showing here is a perfect answer. You have a look at the examiner's answer. For that, what I'm suggesting here is that we've got an efficient way of laying out our answer that will enable you to pick up marks quickly. Good. Let's recap. So, what were the key takeaways from our debrief of question 4 from the SBR exam in September 2018, which on this occasion was on alternative performance measures? For me, one of the key takeaways is the importance and significance and usefulness of articles ACCA publish. A good number of students did well on this question, and I suspect that is because they had accessed those resources published by ACCA. Marking guides are all about 1 mark per valid point. So make sure when you're looking at the number of marks available in a question, you try and tailor the length of your answer to the number of marks available. And the layout of your answer, for me, is crucial. I thought we saw that very clearly in our debrief of section B, how it may be efficient to line up numbers and comments on those numbers side by side. Of course, it's valid to do them on top of each other, but in terms of saving time in the exam and thinking about your presentation, it should be something that you do deliberately. You think about your layout deliberately. The examiner's reports, further debriefs from the other questions from this exam. There's a host of resources available for you in acccaglobal.com, and I'd encourage you to access those as well. Good luck in your SBR studies.